All right, so we are right here, right now, to delve into a compelling and timely topic: investment potential in Tesla stock before earnings. So, as we stand on the brink of Tesla's upcoming earnings report, it's an opportune moment to evaluate the company's trajectory. It will weigh its achievements, also challenges, and what lies ahead in this ever-evolving electric vehicle industry. So, in order to this to happen, I will just get you to our first element of presentation, and that's the element that we want to answer today. What lies ahead before this earnings report? What we can expect really? So Tesla is a pioneer in EV technology and sustainable energy solutions, and has continually captured the attention of investors and enthusiasts alike. So in this presentation, we'll analyze the factors influencing Tesla's market position, fundamentals, technicals, sentiment, and we'll also find out why Tesla has been a significant focal point for investors and what the future may hold for this industry disruptor. But at first, let's find out how it makes money, how Tesla makes money. That's the visualization out of the 2022, and to be sincere, nothing has really changed since then by percentage points. Automotive sales has a reason, but I would like to just give you an insight in what's going on in terms of percentage distribution of revenue. As a reminder, we are live, so if you have any questions, any burning type of issues, don't hesitate to pop it right now. I'll get back to them as soon as possible, and as soon as I just find out that you have attached them. All right, so how it makes money, we can find that the revenue for Tesla comes from mainly from United States, but there is also 1/5 of revenue comes from China and around 1/4 of other countries, as the continent of European Union and Australia, of course. So automotive sales is the main source of revenue with 82.5%, and energy generation storage, to be clear, it has risen, but in this year, but as at the end of 2022, it was at 4.8, and 7.48 was service dual ticket, yes, energy generation storage 4.8, and services 7.48%. And right now we are jumping to business strategy, and you can find right here that Tesla's business model and business strategy move along 3 killer pillars, and there is internalized design and development. Also, I would just maybe just point on with laser. So there's owned manufacturing and direct distribution. We can find that a very unique element of Tesla company was at its initial point of 2019. The inflection point for the company when it started to become profitable was that it offered their products via and the online web services. So it was kind of a ordering the car via playing video games. So that's absolutely one thing that is crashing, is just this innovative approach other than other type of companies back then. Right now, the EV company of Tesla is the one that is breaking grounds and really causing a ripple effect here and there. So also this pillars that I've just mentioned together enable Tesla to be vertically integrated, and that makes possible for the company to become more profitable as it scales. All right, so I want to just look at and have an insight in the hard data right now. In spite of many other elements that may have been discussed right here, I want to just point the couple of elements that just grabbed my attention entirely. So in terms of earnings reports, income statements, balance sheet, many of the elements, if not 95% of stats, are going in a uptrend. But the things that I wanted just to highlight the most was non-auto gross profit. So we can find that the company is diversifying its sources of revenue by non-auto gross profits. That energies and services are contributing for this. In terms of EBITDA, that is a earnings before interest, taxes, depreciation, and amortization. That's a literally metric that giving us an insight into operational profitability and financial performance. Right now, it is one that is in a stagnant point, and it means that the cost of running business for Tesla has increased, and that's what we can also find out by its deliveries of cars to come in. So they are just in order to maintain the pace of growth trajectory in terms of maintaining and also gaining new clients, have dropped its value of its price of a cars. So we're gonna find that EBITDA is right now stable. Maybe it's just a period where we are stagnating and oscillating within a specific period before another leg higher, but for now it's one thing that is pushing us from heading north in terms of its valuation. In terms of other things such as cash flow statements, we're gonna find that there are some things we can really point out as a possible pressure, this negative pressure on the valuation. Of course, changes in working capital, we can find that it has dropped, and it is kind of a stage of preparation for other reverberations around the macroeconomy. So working capital is right now dropping, and it means that we are just buckling up for another tough times ahead. So Tesla faces pressure to maintain profitability after a latest quarter, that's third quarter, and those headwinds, those lower demand elements are really affecting net income of a price. However, we do know that we are still awaiting for Cybertruck from Tesla. Therefore, the price of Tesla doesn't really drop very much. So what's also inevitable is that those elements of reverberations, if just remaining for longer, we may have those headwinds even longer and strengthened with changes in working capital even diving more. So we can find right here that the Elon Musk, as just I have pointed in the previous slide, autonomy will make numbers silly. So whatever the earnings may show to us, Elon Musk says that with autonomic vehicle, those numbers will be just a little thing with what we'll just see. Therefore, the company is trading at that very high valuation in price to earnings terms. Why Tesla is also unique, it's also EV tech leader, so it's considered unique and extraordinary because they are fully electric vehicles with advanced technology. Also, there is a software, very strong software on the deck. So we can find that Tesla is aiming for this much of a autonomic vehicle that may eventually transform the auto industry even bigger. Also, we have efficient vertical integration. Tesla's control over its supply chain, especially battery production, ensures cost efficiency and getting this supply and quality even better. So in terms of EV tech leader that I have omit, we can find it if we just jump through a couple of slides. That's EV sales on the region of US. We can find it. This one is really monstrous in terms of sales, in terms of its peers. So we can find it. That's why Tesla is the one of the most hyped stocks on the stock market right now. If we just point out to another elements, I would like to just have an insight in not only autonomous driving expert that I just mentioned, but also global supercharger network. So Tesla's extensive supercharger network addresses charging concerns, making its EVs more attractive to buyers and bolstering the company's market appeal. That's everything what makes the company unique. When it comes to projections, we can find it from a year from now. In a year from now, the projection remains quite stable, unless the Cybertruck will be let out. When it gets debuted on the market, it will eventually supposedly skyrocket the price of Tesla higher, even to maybe even to over $300 valuation. Right now we are just trading at the levels that are expected to be traded the company in 12 months. When it comes to Tesla's financial forecast, we can find that operating profit and gross revenue are rising steadily, with a eventuality of have it been risen even up to sequentially 320.5 in 2030 and 54.49 in terms of operating profit. So this trajectory of growth puts us in a very optimistic tendency of steady growth. Will it happen? We'll just consider this in a moment. However, when it comes to macro, we are right now in a phase of economy that we may call recovery. When it comes to recovery, that's usually the period where business activity starts to increase and the economy begins to grow again. Maybe we are right now in this phase that will bolster the EV's valuation even higher. However, it's still very far from the bull market. The Fed has risen its interest rates to the level that haven't been seen since early 2000s, and the Fed members are telling that they are still looking to be unconvinced whether the demand is settling and that any weakness is eventually fed through inflation. So it means that we are still assessing another type of interest rates, even though they are assessing that they are walking the path that already been walked before in the past in the economy. I'm just considering that we are walking a very fine line, as that high inflation we had back in US there in 70s and 80s. So it may also this situation we are right now sitting at may spark inflation even higher once again. So if we just overshoot in hiking interest rates, it may really cause a break in something in the economy. Otherwise, we may undershoot, and this rematch and of inflation may eventually get us into more pesky situation. So we are right now focusing more on companies that can withstand the macro tailwind with attractive valuations, and Tesla is supposedly one of those companies, if just consider that we are more categorized into technology stock rather than car company. In terms of what the price is telling us, let's find out on the market, and that's the line chart. We are right after the market open, and on 18th of October, I'm just sending you right to the trading view. We are building a kind of a negative price action before earnings report will be delivered today after market session. So we are sitting anyway at very important, if we just have a range, at very important price meniscus that supposedly may push the price to rebound of here. So it may be right now the shelf of a price where those orders of buyers are right now sitting. However, as you can find on daily, this rebound of 27th of September was on a weak candle type of a formation. So we can find that this candle with very long wick, especially that it's a bearish one. It means that normally it's a sign of where the market will once again about to test it, especially on hourly, even though we tried to build an outside bar, we have just built an inside that gave us the power to boost of around 13%, but in a longer term, this type of a level seems unsustainable. So for me, Tesla is about to retest this 234, and right after, if we just find enough liquidity right here, maybe after dropping to 233, we may see another spike higher, but it all depends on what type of a rebound may that be. If it be just a strong breakout or any type of a formation that may symbolize the buyers, the amount of buyers that are sitting right there. So for now, Tesla is right now, in my view, at the one of the company that I would steer clear, especially that those expectations of third quarter due to this lower cash workflow being just been let out in the latest reports. We can find that this may eventually weigh on the valuation of a stock. So for now, Tesla is, in my view, a bit overvalued, especially that we are right now selling on the strength before earnings. So it means insiders are right now just running away from the company. And the next important point will be 234. That's where I will just sit and just observe it from a sidelines. So let me know anyway in the comment section below whether you are buying it right now or just waiting for better times to come. However, for now we are jumping to option chain for Tesla, and in order to verify how the option market is assessing the price right here. So in terms of calls, we have the largest open interest right at 275, and we are right now sitting at around 244. Whereas in terms of open interest on puts, the highest open interest right there is at 240, but it's still lower in open interest than it's on call. So it means that the crowd is sitting on a buying side of a trade, and that's normally it's where we don't want to sit right there. So the maximum pain point is about to get achieved with this 240 and everywhere beneath it. So I do expect that this max point, pain point, will eventually lead us back below 240, and will just maintain this tendency in price into heading more into 230-ish barrier, where the bulls may be sitting right there. So right now let's jump to our wrapped up type of a section. So Tesla is definitely a pioneer with EV technology and has reached a remarkable growth. But right now Tesla, even though it had an impressive journey in its relatively brief history, it may achieve right now profitability that will be very difficult to overtake despite this macro headwinds that's right now coming on. So the current electric vehicle market is experiencing a notable surge, attracting a host of new competitors and igniting a price competition. But in the short and medium term, even though we are in a fourth quarter in terms of the investments in this period was highly good. We are right now expected to drop a bit, with this expectations being eventually missed or maybe beaten, but by a very low margin. From my perspective, Tesla, equipped with leading EV software, cutting-edge battery technology, should eventually be pushed higher in the latest late weeks of November. But right now, the company's valuation seems a little bit too high, and pointing via the price action and other types of elements that we are awaiting is that it may eventually drop before moving right forward. But it all depends also on what the Cybertruck standpoint of Elon Musk will be on earnings report. So it's very interesting to watch it indeed. So thank you very much for sticking around, and if you've enjoyed, just hit this like button. Thank you very much, and have a great evening wherever you are. So that's it from me, and see you tomorrow at 8 a.m.